Hi and welcome to your monthly update video on the UK housing market. Lots to go through today. I've got some good articles here for you. So let's get into it now then. And please remember to like the video and subscribe if you enjoy a monthly update video. All right, let's go to the screen share. So very similar to last month, I just want to update you, especially if you're looking to purchase a home. You're waiting for house prices to come down. We'll touch upon that a little bit later in the video. So yet again, another large financial institution, which is going to be buying 1 billion with a B pounds worth of property in the UK housing market. Not good news if you're looking to buy, as always, but they're looking to purchase and then rent these properties out. So that's the first thing to just be aware of. Now, I did have some other articles I wanted to show you here, but very unusual. It was called "How Much Longer Can the Treasury Rig the Housing Market?" It's interesting that whenever these sort of articles come out, you've really got a day or two to comment on them before they mysteriously just disappear and get taken down. I really don't know why they would be taken down when they're criticizing the government and telling the truth on what's actually happening with the housing market. But we've got some really great articles that we're going to go through here, and then we'll go on to some analysis. So this one's from the Evening Standard. London house prices suffer biggest monthly fall in a decade as pandemic mini boom judders to a halt. So this shouldn't be any surprise to most of you. I've been talking about this for over a year and a half now, that London would be the first casualty of this housing market, this runaway housing market, because of the price to earnings ratio. I'm going to come on to that in a little while and talk about the price to earnings ratio right now in the United Kingdom. And if you are looking to purchase a property, the South, especially London, is far more overpriced than is the North. So Wales, Northern Ireland, the north of the country, Scotland, these are a much better value than those prices in the South, those houses in the South. So let's have a look then. It states that the London property market suffered its biggest monthly fall in a decade. So this was back in April. We haven't got quite the same amount of data yet. This is a difficult thing with the UK housing market. The data is always at least 1 month, if not 2 months behind. So trying to actually comment on it in real time, I'm always at least a month behind, which makes it very, very difficult. But you can see here the average London house price dropped 2% to 491,000 over the month in April. So that's wiped off £10,000 of its value. And actually, this is a good point here, and it talks about some of the reasons why. London rises have been lagging the rest of the country this year, in part because of a race for space. So if you remember going back over my UK videos, I've been explaining that we're having these mass migration patterns, and a lot of people are wanting more space at the moment. So they're running away from the big cities and the apartments, and they're going towards more space. In fact, let me grab another article that's got this data as well. Yeah, here it is. So it's showing that just as many 18 to 24-year-olds are planning to move to the countryside. So we're talking about the countryside here due to the pandemic, as those looking at the larger towns and cities. Now, if you go back historically, younger people of this age group, it would not look anything like this. They want to move to the big cities. They want the city centre apartments with all the restaurants and the bars and, all the nightlife and things around them. But now we're seeing this trend, even in this age group, towards more urban and more and less urban settings as well. Now, I do want to pick them up on this point because I don't 100% agree with this. So it says further slowdowns are expected as the stamp duty holiday ends in June and 3 million workers come off the furlough scheme in the autumn. Now, if we're talking specifically about London, then yes, this statement is true. But for the rest of the country, it's not entirely true. And you'll see this a lot on a lot of articles talking about the stamp duty ending at the end of June. Now, they're specifically talking about over 500,000. In fact, let me see if I can grab this as well. Okay, here it is. When was the stamp duty holiday extended? The stamp duty holiday was originally due to have come to an end on the 31st of March 2021. However, the Chancellor announced in his budget that the same month that the stamp duty holiday was to be extended. So you remember, I said if this is extended, it's going to kick the can down the road. We're going to see higher prices. If they do end it, we're probably going to see a plateau. Now look what happens. They extended it And a lot of people are talking about this 30th of June 2021 end date. However, that is for £500,000 houses. So that is specific for somewhere like London or people who are buying larger property. But for the average house price for the UK, which sits at just over £250,000 right now, it doesn't actually kick in until this date here. So the 30th of September 2021. What else ends on the 30th of September 2021 is the furlough. Now this links into a lot of other complex topics, because what's going to bring down house prices are interest rate rises as well as inventory coming back to market. Now, if the furlough ends at the end of September, and of course the Bank of England, the government, doesn't expect to see, high unemployment at this point. They think everyone's just going to go back to work, etc. I think this is nonsense. The data just doesn't show everyone going back to work. I think we're going to see an increase in the unemployment rate, and this is going to delay what the Bank of England and the government are doing, where they're saying, we might do an interest rate rise, next year, we might do 1 or 2 here. I don't think they're going to do it. I think it's going to be a lot later, because when the unemployment rate kicks in and it's a lot worse than they expected, they are not going to be able to raise interest rates, because if they do, it's just going to put a spanner in the works of industry and businesses. And remember, they already collapsed all the businesses with the lockdowns, right? So you've decimated this industry of jobs. So these businesses, and you can go anywhere. Right now, I'm in Costa Rica, San Jose. And before I was in Florida and then California, and then I've been traveling around all these different countries. It doesn't matter where I go, it's the same scenes everywhere. You walk down the street, even the main street, 1/3 or at least 25% of the businesses have collapsed. Now, yes, new entrepreneurs are moving into some of them, but a lot of them, they haven't. They've collapsed. And the trend I'm seeing is not big businesses opening where they're employing 10, 20 people in these same units. No, it's like, your small entrepreneurs, startup people, millennials wanting to start their first business for the first time, families, so you're not seeing this big wave of new employees that was expected. So when you put all of this together, you have the high unemployment, you're not going to see interest rate rises. This is just going to kick the can down the road, and they're going to keep interest rates low, historically low, with these 95% mortgages. But in terms of seeing a big crash, well, the sort of fundamentals are not going to cause the crash. Yes, people are going to get priced out, as I've said for the last year and a half. There's always a cap to any housing market, and that is, the cap is unaffordability. But then you've got a deposit to put down. People can't even afford the 10% or 5% some people putting down now as it is. How are they going to then find double that amount of deposit? They're just not. So you're going to see a cap in the house prices. I think it's going to be in conjunction with these high unemployment rates and everything else that's going to be going on. It is only a matter of time, and it's going to be psychological. That's what I think. You're going to see 2 things that cause a crash. One is going to be psychological, where the confidence just comes out of the market and people get worried. The media start putting out stories that all the housing market, might turn around, might crash. People are going to get cold feet. They're going to get wary. The other side is a very technical way, and that is simply that they raise interest rates. And once interest rates get risen, then people's affordability factor comes down. They won't be able to buy as much with the same money that they have monthly, because that's how people buy houses, on the monthly payment. They don't necessarily buy them cash. So these are all the things that I think are going to come in, because as the stamp duty kicks in, then the end of it, some people are going to miss the deadline. So they're going to say, I want to pay less for the house. I want to give you X amount less. And you're going to start seeing it in September. You're already going to start seeing it now through the summer, but this is where it's going to kick in. And October, November, December, winter period anyway, so house prices are never super strong during this period. This is what I see occurring. Let's go back to the screen share for a moment then, because what I want to show you here is the average wage. So let's just call it 31,500 for the UK. And then let's look at the average home price. And again, this is disputed. Halifax put it at 261. The nationwide puts it at 245. So let's just say that it is 250,000. So let's bring up the calculator. So £250,000, and let's divide this by the average wage, which is 31,500, the average wage. And this gives us a ratio of 8 to 1 for the home price to income ratio for the UK. Now let's look at previous bubbles then. And by the way, just so I'm 100% clear, the UK housing market is in a giant bubble right now. I think it's only a matter of time that we have a major correction, but I do believe we're in a giant bubble. A lot of people have been saying, oh, Neil's changed his mind when he's saying now we're not going to see a housing market crash and everything's fair value. I don't know why people keep making up all these stories about me and, making all these videos. I haven't changed my opinion on it. All I've changed is when this is all going to, kick in and occur, because there's nothing I can't forecast what the Bank of England's going to do with the interest rate. I can't forecast that the government's going to come out with this new 95% mortgage and then, say no stamp duty and all this. These things, no one can forecast these things. So I haven't changed my opinion despite all this nonsense that keeps going around. I still think that the UK housing market is in the biggest bubble it's probably ever been in, apart from 2008. Yes, they're comparable, and there's a lot of things that we could talk about, but it is. And then who knows exactly when it's going to pop, but it is going to pop. This bubble is going to pop. It is inevitable. It's either going to get popped by, like I said, psychology, it's going to get popped by an interest rate rise, or it's just going to get popped by unaffordability, at which point it will probably plateau until one of the two things occurs. That is what I've always said. I haven't changed my opinion on it. We're in a bubble. The house prices will come down at some point, and it's going to be absolutely horrific when it comes down. If you combine this with a stock market crash in the future as well, again, psychological, this could just be this would cause not just a recession, but probably a depression, not just through the UK, but it could even be a global depression that we could see in the future if all these markets crumble at the same time. Because what did I say at the start? All of these different companies now and banks, they're all investing into different housing markets. Australian bank investing into the UK housing market, an American bank investing into the UK housing market, British banks investing into the USA housing market. Everything is connected now. This is not going to end well, ladies and gentlemen. So here we were here, 6.43. No, we're up to about 8 right now. And where was the last housing bubble? 6.8. So really, it's only a matter of time until we have some major issues here. And I just want to quickly touch upon the nationwide and the Halifax home price index as well. So these are definitely worth, just do a Google search, you just very easily find these home price indexes. And this is about as good as we get for the UK. It's not like the USA where I have 3 amazing indexes that I can grab data from, very timely as well. UK is very slow and outdated, and this is all we have to go off. But it's enough to do some pretty basic forecasts. You can see here where we've had the annual changes. I mean, look at these. This is not sustainable. It really isn't. And look at the inventory level here. We have hardly any inventory. Last April, we had no inventory, and what happened to prices? They were shooting up. Now inventory is going back down again. You're going to see the same pattern. Let's just very quickly touch on the nationwide report then, and we'll go into the end of the video. And you can see here as well, so this is June 2021. House price growth accelerates above 13% in June, with all regions recording a pickup in Q2. I mean, this is crazy, ladies and gents. 13% rise. This is completely unsustainable. It's a massive bubble. This is not going to do well. And you can see here they put the average house price at 245,000. So there is quite a discrepancy between the Halifax and what the nationwide actually say here. This is showing the house price growth. So we have Northern Ireland, Wales, Yorks, Midlands, North, etc. Very useful data to have a look at. You can see we don't have any orange on this chart at all. Everything is 5 to 10% growth, 10 to 15% growth. Hugely unsustainable. Well, I hope today's video really helped you just to get a grasp on what's actually happening in the UK housing market. Once we get into October, I'm going to have to then have a look at all the data again, see what sort of impact we have from the furlough scheme ending. Again, I'm pretty confident we're not just going to see all those people going back to work. So we need to see what happens as a result of the furlough ending, what happens as a result of the stamp duty for that £250,000 range as well. So I hope you enjoyed today's video. Please remember to click the like button, subscribe if you haven't already. And apart from that, I'll see you next month with our next UK housing market update. Take care. God bless.